Hello and welcome to March 17th, call options MULN. MULN got out at 38% in 4 days and it was on a penny stock, an option on a penny stock. Here we go. So there's our numbers. We got in on the 14th, got out here on the 17th, that's 4 days. We got in at 94 cents, got out at 130, and we had 7 contracts. So let's call up our trusty calculator. 130 minus 0.94. Return 36, divide that by the 0.94 as a percentage, and the return was 38.29. So there we are. We got 38.3 on the official for the record. All right, on the numbers. This was 7 contracts, and it was 36. It was 36. So let's go to the chart. That'll be more fun. So let's go to the chart. There's the chart. And now let's do our calc. So we got in at, okay, wow, it's been a year. I didn't realize that. I've been on Reddit for a year. Okay, going on here. We got out at 130. Oopsie. Let's see, 130 minus 0.94. 36 cents per share, then that's 100 for 1 contract times 7 contracts. 7 contracts, and our return was a net of $252, then minus the $10 on the fees, about $950. I've rounded up. Minus, so we made a profit of $242 on this trade, $242, and the cost of this trade was 94 times 100 times 7 contracts. The trade cost me $656 because remember, it was slippage. I was anticipating 60 cents. I was expecting $300, 420 right there. I was estimating that the cost was going to be 420, and we actually got filled at 458. So that was a bad fill. That's what the word bad fill there is, because I was anticipating 60 and got hit with 94. All right, enough with the calculator. Let's go on to setup of this trade. The setup of this trade was my price channel, my inner price channel, and I set this trade up. Now I set the trade up on the body of the candle, not the high of the candle, because this was a penny stock, and penny stocks can be very volatile, where this can maybe shoot up, maybe get here and then come right back down and crash again. So I was, you know what, this is a fresh trade. It doesn't owe me any money. I'm just going to go and take what I can out of it on a safer, conservative way. And that's what you do, a body risk. And the goal was 450. When you see the word gold, that means it didn't owe me any money. So whatever this trade was, it would have been a wind circle trade, which is what it turned out to be down here. All right, the regression channel had originally come out and said that this trade would exit somewhere around in early May, and for some reason I didn't feel comfortable with taking that trade at 20. So let me pause here for a minute, please. My apologies. Thank you. So what comes down to is that I took a 3-to-1 here off the body of this candle, and then these resistance zones where price has had done some kind of pivot turn in the past, and I said that's an area. Also, I want to make sure that price has been in these zones before, so the result is price is not afraid of going into that zone again. So that's why what those yellow banners are all about. And also when I set up my 3-to-1, I want to see if price being there, that I have an opportunity going there, because when price is going into new territory, and according to some traders, you're supposed to respect it and say, you know what, wait to establish it. For many of my instructors in the past, it's the same thing. And then other instructors says, and other traders from Market Wizard books say, if it looks good, set it up and go for it. If it becomes all new time highs, you win. If you still maintaining your risk rules and risk factors are the same, what's the difference? Just follow your rules, follow your setup, follow. So All right. So that said, there was a 3-to-1 right there. I said this was a bad fill, and the anticipation was 420. As you saw, was 456. So let's get down to the closing numbers here. So 38.3 in 4 days, and $36 something contract, 252 minus about $10 in fees. 242 was toward the profit, and look, it was a nice little spike right up and came price right back down. So here's the sellers are pushing the price down, and there's a little bit of support here from the buyers, and the close is above the 50% line of the range of the candle. So the result is that this could have still going on. So that moves over here to our evaluation questions. What did I do right? Well, I followed the scanner and made the entry. What I did wrong was not following the entry rule. The entry rule said to go here. So if we had done that, our target would have been up here. Now, is it fresh territory? No, it's been here before. Prices, you can see the 50-day moving average is coming down. You can see that the upper channels are coming down. So that means that price has been in this area before. But because it's a penny stock and the volatility and it's an option, I would, so to take a point was with the scanner doing the right thing. And what attracted me to this trade was that it came out at 251.5 million shares traded on the setup here on this day of the 14th. On the 11th. It's on the 11th. We got triggered on the 14th. On the 11th, Friday the 11th. So that's what got me interested into the trade. And as it turned, it pulled a gap over the weekend. So nice. So what could be better? Trust the scanner, especially on 90-day options. I had 90 days on this trade, so I should have gone for the 3-to-1 above, because it looks like all the indicators are turning around. And then what I could done is the exit protection at the first ratio. So once price is cleared up here, I'm going to put the stop here at the first ratio. Now, if it's 3-to-1, yeah. So you see prices closed here. I could have put the first ratio right there, and then let it sit there. And there would have been the new 3-to-1 had I gone off the top of the candle like I usually do. And then let's write it out. Last bar low. Once price has broken past the third ratio, which is here. Let's go back to the original trade. The original trade was right in here. The original trade was right there. It's gone last bar low here, but that's taking a risk. And profit in hand is a profit in hand, and this was a no trade. So one for the winner's circle and extra profit, and the contributing back to the coffers. You saw that it cost $458, and I ended up getting back, a gross of $910 added to the buying power. Well, with that said, we'll go ahead and conclude this report on MULN 38% in 4 days. And I thank you very much for stopping by. Drop me a comment, subscribe, and send me some questions when you have some time. I thank you. Bye-bye.